People are still joining. Wait a couple of minutes. Great. I think let's start. Very surprised and happy by the number of people that have joined us. Probably the highest number that we've ever had so far. I'm seeing some familiar names as well. It looks like people have joined us from around the world, Mayank. Appreciate people joining us from various different time zones. I think a lot of our investors, customers have been waiting for hBits to launch a property, and would just like to say I think this is the best property that we've listed so far. And Mayank will take everyone through that shortly. Just to introduce Mayank has joined us as Chief Investment Officer. Mayank comes with 18 plus years of experience in real estate acquisitions. He's worked at companies like Logos, Everstone, Indospace. So comes with a tremendous wealth of experience. I think in the last webinar, had the pleasure of introducing you to Samir, who's heading global sales for Nomura. He's our CFO. So he used to head global sales for Nomura for 13 plus years. Prior to that, at companies like Bank of America, UBS, JP Morgan. Samir is a chartered accountant. I am an Ahmedabad graduate. Mayank, who I mentioned, who joined us as CIO, along with his real estate experience, is also a PhD in computer science. And then I think a lot of people are familiar with myself. Just for the new people who haven't invested with us before, who've also joined us, to take you through some of our partners that we work with. Deloitte is a structuring advisor. JLL is our valuation partner. Shardar Amarchal Mangaldas, our legal partners. ICICI Bank is an escrow partner. We work with CRE Matrix for all our data. And Universal is our trustee. So far, we've done 150 crore in worth of assets. And we deal with marquee tenants. Our tenants include ICICI Bank, Mane, which is a French MNC, Ingenico, which is the fourth largest e-payments company in the world. So, some very marquee tenants around Mumbai so far. Without further ado, I'd like Mayank to get into this presentation. But before that, would just like to, very happy with the asset that Mayank and his team have listed for us. Compared to all the other assets that we've listed in the past, this asset checks each and every box that you look for in an investment. The building is AAA, grade A plus. The location is Powai. You can't get better than that. All the large funds, global funds, have invested in Powai as a micro market. There's Brookfield over there that's invested in a big way. The tenant is an American MNC, Sitel. It's about an $8 to $10 billion company, so can't go wrong. There's a good lock-in. There's a 4-year lock-in left in the contract, and Sitel has already been there a while. And it's a very attractive entry yield of 10%. So Mayank, thank you, and I'll leave it to you.
Thank you, Shiv. Good evening, everyone. Thanks for joining in. We look forward to your attendance and your participation in this opportunity. As in terms of my overall experience in the last 15-16 years investing in real estate, this particular asset really stands out for various reasons listed by Shiv. So let me jump into it. Our starting yield is 10% entry yield. We're expecting exit IRR of 16.4% from this investment. I think one of the highlights is the tenant and the lease term. This is a 5-year lease, 5-year lock-in with one of the largest BPO companies in the world called Sitel. It's a global leader in this space. This happens to be their Bombay headquarters. India headquarters. They have 4 offices across India: Bombay, Gurgaon, Chennai, and Hyderabad. And Mumbai or Bombay is the India headquarters. Roughly 2,000 to 3,000 people work out of this facility itself in Boomerang.
Sitel is the tenant. It's a global, one of the top BPOs in the world. In India, they have 4 offices, and Mumbai is the headquarters. We're also acquiring this asset at a significant discount to the market rate, which I'll cover in detail as we go along. This is the 3rd term that Sitel has been in this property, showing their stickiness. And again, I'll touch, as we go on, I'll touch why they've been here for so long and what the rationale behind that is. And then talking about the building, which I mentioned earlier, AAA building in a great location. So in terms of the asset, Boomerang, it's a grade A building, it's LEED certified. Overall, the development is 1.26 million square feet. And it's a spread across 3 wings, but there's just one tower with 3 different wings. There's a vacancy of 5 to 10%, which is very natural for these large buildings. It's just normally a tenant leaves, another occupies it. So 5 to 10%, you can say the building is 100% occupied in a way. 2 basement, ground plus 8. That's the building structure. Property is managed by JLL. So, when you have a JLL or a CBRE or Cushman, one of the IPCs maintaining the property, it's a AAA building. And JLL does a great job of maintaining the building. For any of the investors, customers from Mumbai, I'm sure you might know about this property. It's a great property. Tenants, the other tenants in the building, there's FedEx, there's Hitachi, there's ICICI Bank, there's Technip. So it's not like Sitel is the only good tenant in the building. I think the full building is occupied only by grade A tenants, which speaks to the quality of the building, the quality of construction, as well as the location. The other most important part of the building, which you can see in this floor plate, it's the single largest floor plate in the whole city of 160,000 square feet, which is very, very hard to come by, which makes this building very, very special. The blue highlighted area is the area in which Sitel sits. So Sitel has 5 different units, and this is the unit that we are going to acquire. So as you can see, it has great access to 2 different elevator banks on the 6 elevators on one side and 2 elevators on the other side. These are some of the photos of the assets. So funnily enough, people might think, why is the building called Boomerang? Well, it's simple. The building is shaped like a boomerang, as one could see from the floor plan and the image on the top left. On the right, you can see the lobby, you can see the clubhouse. I think when Mayank saw this building for the first time, he came back to me and said, I've never seen a building of such good quality of construction. And what we look for, we don't only look for how good the building looks from the outside or in the lobby. What's really important and the heart of the building comes in the basement, where you have all the amenities. And that the photo on the bottom left doesn't do justice, but really it was amazing to see. So to talk about the tenant a little bit. So Tenant is Sitel, like we mentioned, 30-year-old company. It just got acquired by a few years ago by Group Arcticol, which is it's a privately owned company. Global headquarters are in Miami. And they're present in 21 plus countries. They have 170,000 employees around the world. They serve clients in 45 countries, and they serve 9 million customer experiences daily and in 60 different languages. And you can see their diverse set of customer bases, right? It's not concentrated to just one industry. It ranges from BFSI, healthcare, insurance, manufacturing, telecom. I can keep going on, and these are just some of the industries. So what does that mean? That means is that Sitel as a group, they're not really dependent, or their revenue is not really dependent on any one specific industry. So they can really, whether there's a recession, whether the economy is doing well, Sitel's growth will be stable because its customer exposure is diversified, extremely diversified. In fact, the next slide shows just that. To talk about Sitel's presence in India, like we mentioned, Sitel is present in 4 different cities: Mumbai, Gurgaon, Hyderabad, and Chennai. Mumbai being the largest and the headquarters. Overall, in this building, there are probably 2,000 to 3,000 employees who work out of the Sitel office in Mumbai. So it'll be very hard for them, and they've been here for 11 years. So even when their lock-in is over, lock-in is just on paper. Even when their lock-in is over, the chances of them leaving are very, very minimal. There's no reason for them to leave. Their whole catchment base probably lives close to Boomerang or close to the Western Express Highway. To get such a large area that they're occupying, like I said, this is just one unit out of 5. It's going to be very, very difficult for them to find another place in this micro market. And as a tenant, during COVID, they paid on time. Not even a day late on any of the months. Because again, for BPO companies, they don't really look at real estate costs as their main expense. Real estate costs, is 5% of their employee costs. So, for them, this is just something, as long as they have the quality and the facilities of the building, they're not going to think about this. They're set over here.
Just to add to this, they've been tenants at this facility since late 2011, early 2012. I think they occupied it end of 2011, did their fit outs, rent commenced in Jan 2012. Give you some context on that. They spent about 17, 18 crore about 10 years back on the fit outs, and they have been refurbishing and keeping up the premises on an annual basis. It's not like they've let the facility go down. This is their main office in India, it's their registered office in India, and they intend to keep it that way. The other point is, it's a dollar long.
Just before you get into the second point, I would like to highlight, this is the kind of research and analysis that Mayank and his team does. Not only did he check what kind of the cost of fit outs 10 years ago was, he also checked with the facility manager to figure out how often Sitel have brought in new furniture and what is the frequency of them refurbishing the office. So we get a level of idea into the kind of, upkeep, the kind of effort they're putting, the kind of capex the tenant is putting into keeping their office space completely modern and completely ready.
Yeah.
Sorry, Mayank. Yeah.
No, please. It's a fair point, because we need to understand the level of involvement and expenditure that the tenant incurs, right? It shows level of stickiness and their intent going forward. It's probably the best judge. Money speaks, as we know. Second thing is, these kind of businesses are dollar long. What that means is, as long as the dollar keeps appreciating and the rupee keeps depreciating against the dollar, it's in their interest to stay in India to serve offshore clients sitting out of India. Given the way the dollar has behaved, or the rupee has behaved last 4 or 5 years, and even going back maybe 15, 20 years, there's a 4.5% depreciation of the rupee on a year by year basis. That pretty much offsets their escalation on an annualized basis, rental escalation, and goes to show that they have interest in staying in India, they have interest in staying in Bombay.
So here are just a few news articles on Sitel. In fact, recently they've just been rebranding as Foundever, which was just this month. In fact, it's not even April, so it just happened. As a place to work, it's been rated very, very highly. In fact, they've acquired a $2 billion company in an all-cash transaction. So when generally when transactions are so high, of such large value, there's generally a significant portion of stock involved. But the fact that this is an all-cash transaction shows the kind of cash balance and cash reserve Sitel is sitting on. Again, it's just hard to highlight what kind of tenant and the quality of tenant this is. But these articles kind of do some justice to it. So to talk a little bit about the location, this is located in Powai, and it's a very, very exciting destination. It's close to both the Western as well as Eastern Express Highway. It's 1.7 kilometers from the Sakinaka metro station, and 1.5 kilometers from the upcoming Line 6 Powai Udyan metro station. Now, the interesting part is that this is an upcoming metro station, which means that the price of the asset today hasn't priced in the fact that when the metro station comes up, the price of the asset will rise. And this is true for any asset, any residential, commercial, office, retail. If there's infra development next to that, it causes the price of the asset to rise. So one thing to look at, and we look at, and Mayank and his team look at, is what kind of infra development is happening near that asset. So the Line 6 connects from basically Jogeshwari to Vikhroli. There's also a separate road a flyover that's being built under this metro. And so it just enhances the connectivity significantly. And it's just 1.5 kilometers away from the asset. Along with that, the Mumbai clients will know, people who visited Mumbai will know. But for other customers, I think 30% of our customers are NRIs. It's just 3 kilometers away from the international airport. Yeah. And for MNCs, because they regularly, MNCs will have global CEO, global HR head, etc. visiting. It's important to be close to the airport, to the international airport, which is another reason why Sitel, they're not going to move away from this Powai, Andheri micro market. They're going to be here. And then in this micro market, there's no way they're going to get any space that's this large. Because again, they're occupying 5 units, not just one.
Yeah, fair point, Shiv. I think the takeaway from here is Powai is a premium address, and there's a lot of stickiness for the tenant, and connectivity, which is probably one of the most important criterion we look at, is very high for this particular location, both in terms of Western Expressway, Eastern Expressway, railway connectivity, and the metro as well as the airports. So this is a slide on the overall market, which is micro market, which is Powai, and some of the large tenants that exist. As you can see, these are brands that speak for themselves. Some of the largest global brands, as well as largest Indian listed, as well as startup brands: FedEx, ICICI, JP Morgan, Byju's, Tata, Kellogg's, Wipro. These are some of our neighbors. And Powai, as a micro market, specializes in IT and back office, as well as startup infrastructure. I think this is one of the more important slides, which speaks about the benchmarking we have conducted against comparable buildings in terms of rental. As you know, the rental we are looking at is 106 rupees per square foot, 105.8 to be precise. Based on our in-depth analysis of lease rentals in this micro market for comparable buildings and tenants, or not tenants, buildings rather, the figure we arrived at is about 134 rupees. And what that tells us is that we're at a 20 to 22% discount from what the market is at. Now the question is, why are we at a discount, and what does this tell us? I think this is two things. One, this is a COVID lease, hence our particular rent is a little bit depressed compared to what the market average is. I think when the seller and Sitel negotiated this was peak COVID. If I remind you, this is 2020 October when this lease was signed. I think the seller was just happy to have a marquee tenant like Sitel continue, and hence gave a discount, which reflects in two ways. One, the number itself, 105.8, and the escalation, which standard is 15% every 3 years. Here, it's 10% every 3 years on the lease itself. What this does is... Sorry, go ahead.
So just want to add what this, Mayank, you rightfully said that, it's a COVID lease. They signed in October 2020. So obviously Sitel was able to negotiate a good rate. It was natural, but it's actually beneficial for us that it's because of what happens is that at the end of the agreement period, we're able to negotiate a higher rate, and so when a new tenant needs to come in, whether it's with Sitel and we're renewing with them, which is what we expect, we'll be able to say, hey, this is the rate in the other areas in the market, in the other buildings, in the same building. So we need to jack up your rental to bring it back to market.
Exactly. So that was the second point, right? This helps us in two ways. A, we would like Sitel to continue and then just come back to market rates, which is what this number is. And B, if for whatever reason we need to get a new tenant in, this is what the new rate is going to be, and a correction to market escalation as well. So that's the yield, and the rental is one part of it. Now, if we look at the capital value or the per square foot rate on a chargeable area basis, we are at a 13,558 rupees per square foot, roughly 13,500. Yeah. The market average for this micro market is close to 17.5 to 18.5 thousand rupees per square foot. And these are examples of comparable buildings and transactions, actual transactions that have taken place in the last year and a half, maybe 2 years. As you can see, we are at a massive 25% discount to what the market rate for this micro market is. Again, this will be helpful when we go and look at an exit 4 to 6 years down the line, because our entry price is so low. We expect a good outcome at that perspective as well. I think one more thing to focus is, or to know is, GIC and Brookfield did a large transaction recently, where Brookfield sold part of its stake in a large development not far from here in Powai to GIC. It goes to show the kind of confidence the global investor community has in this micro market and this location. Second thing is, it really has set a benchmark for a transaction, which should help us down the line. This is a little bit about the developer. This building has been built by Kanakya, one of the largest mid-market developers in Bombay. Those from Bombay will know their malls, their other developments. They're big in residential as well. They've done about 45 residential projects, 4 malls, about 15 million square feet of space delivered. They've been in this business for almost 4 decades now. Very high attention to quality, very high attention to, I would say, design and I say customer movement and things of that sort. So a very large developer with experience across hospitality, education, office, mall, and resi. Now getting into the details of the transaction, our licensee, as we have said earlier, is Sitel. This is their 3rd term, which extends from September 2022 till Jan 2022 till Jan 1st, 2027. It's a 5-year lease with a 5-year lock-in. They're locked in for the entire 5-year duration. We have roughly almost 4 years of residual lease term and lock-in available for us. The escalation kicks in after 3 years of the lease start date, which for us will be less than 2 years, because 1.25 years of the lease have already commenced or already gone by. There's a 4-month security deposit, and as you know, the rental is $106. When we look at the breakup of this figure of 13,558, or sorry, the additions to that, where we look at the total cost of acquisition, it's the cost of premise is based on 27,000 square feet of chargeable area, plus stamp duty and registration, advanced cam and prop tax for 5 years, legal and admin fee of 34L, and acquisition fee, plus reserves for any upkeep that might happen. And that's the breakup of total acquisition cost. So in case you want to add anything here.
No, I think that's that covers that.
Done. Our financial model, this is where we've modeled returns for our investors. We're targeting expected IRR of 16.4%, which is based on a 6.5% annual cap appreciation. We feel that's a very realistic yet conservative figure. There is upside over here. 6.5, given market background, or sorry, historical market trends, and where we see this going, is a very fair number. And the entry yield is in front of everyone. That's just math. That's right there. We have run some sensibility on the capital appreciation, given that it's a projection from 4 to 10%. The expected IRR ranges from 14 to 19.5%, and the money multiple ranges from 1.6 to 1.87.
So here I want to add that even even if you assume a very, very conservative 4% capital appreciation, which is lower than your escalation, which is lower than inflation, you still end up with a 14% IRR. So even as a downside scenario, looks like a very, very attractive asset.
Yeah, fair, because I think the base case assumes 1.7x roughly of money multiplier, and your downside case is just 1.6. So fair point, sure. I think these are our, I would say, new terms in terms of performance fee and hurdle rate. So if you want to just elaborate on that, please.
So yes, we charge a management fee of 1% a year in terms of performance fee. We've increased our hurdle rate, so our hurdle rate is 10%. So that means until an investor makes 10% IRR, we make nothing. Only above a 10% IRR do we make 15% of just the additional amount.
Okay, now investment thesis is essentially the reason why you should invest in this, and why anybody like us would recommend this transaction to you. I think the slide speaks for itself. As an institutional investor, when we look at something, there are 4 or 5 parameters you look at, right? So who's the tenant? What is the stickiness? What are the rental terms? What is the building quality? What is the location and such? Excuse me. And I think in this particular instance, all those boxes have really checked out for us. Like I said earlier, 10% entry yield, 16.4% expected IRR on a very conservative estimate of 6.5% capital appreciation per year. The tenant itself is a AAA Citel, global industry leader. They've been here for 11 years. They're here to stay. The building itself is a LEED certified AAA building or grade A building in Powai, one of the best micro markets in central Bombay. Strategically located and a great lease, which we can count on renewal.
Great, thanks, Mayank. So now let's jump straight into Q&A. I think people have a ton of questions. So I'll just start reading out the questions. How much square feet size has been taken by Citel, and why did we not take up the entire? So Citel totally in this building has 140,000 square feet. So this is the unit that we've decided to take up because of the location within the building. This is the unit that was an offer, and this is the unit that we thought was very attractive. The overall expenses add up to about 13% of premises costs. This is from Ravi. This is on the higher side. What are the total costs mentioned as other charges of rupees 2.26 crore? So Mayank, if you can just pull up that slide. So 13% of premises is normal because you have your stamp duty, you have your legal fees, you have the admin expenses, the director's fee. So, compared to all our assets, this is the standard that we have in terms of expenses. So yes, the 2.26 crore is the stamp duty and registration. So that includes stamp duty of the buying the premises, the stamp duty of signing a new leave and license agreement, because it'll be registered in the new SPV, as well as registration.
I think it's important to note, Ravi, it's a fair question, that there's also advanced prop tax and CAM collected for 5 years, which builds into your 13%, right? In terms of 42.6 over 37.3. And that does two things for us. One, whatever rent we calculate, we collect, we distribute 100% of it minus TDS and taxes, if any. So there's no leakage on that front. Secondly, if for any reason we need to pay tax, property tax or CAM out of pocket, we don't need to come back to investors. So your investment is covered from day one.
Thanks, Mike. So question from Asim, since the tenant has 3.75 years left, since those terms will be renegotiated or we have to find a new tenant, for that, what will be hBits fees apart from management fee and performance fee? So to answer the second question first, at the time of tenant leaving, at the time of renegotiation, hBits doesn't charge any additional fees. That is part of our management fee. And will we have to find a new tenant or will Citel stay? We are very certain that Citel is going to stick on, given their investment, given their whole business plan, their whole business thesis. And we believe that we'll be able to negotiate that at a much higher rate than today's market. Is the building LEED certified? Is it gold or platinum? So building is gold LEED rate certified. When was the construction of this property completed? So OC, and there's another question on OC. So the last OC of this building was received in 2016. It's been received in phases until 2016. There's a question. Do you intend to make the investors return tax-free or tax efficient? Why not have the SPV in LLP format? So, the private limited model that we follow is a very tax efficient model. And just to explain for new investors, whatever investors get equity and CCD in the private limited company as per the amount that they invest, whatever rent comes into the private limited company is paid out as interest in CCD. So the company becomes tax-free, and it's in the investor's hand that it's taxed as per the investor's tax bracket. We also like the private limited company because it provides a lot more security and comfort to investors, since they're shareholders in a private limited company as opposed to being partners in an LLP. Rate doesn't take care of other expenses, stamp duty from Parag Patel. No, we have added that. If we take them an average consideration, the rate is 15,500, not 13. Yes, correct. The cost of premises 13,500. With the add-ons, obviously it does become higher. But the comparative that we put in our sale transactions is comparing apples to apples. So all the other transactions are also only the cost of the premises. And they would also have their add-on. When you acquire a property, anyone will need to pay stamp duty over and above this. Anyone will need to pay legal fees to acquire the property. So they'll also have their add-ons, but we wanted to put 13,500 because we're comparing 18,000, which is an apples to apples comparison. There's a question from Jigar. Rental of 105 includes CAM and property tax. You have shown 5-year CAM and taxes extra. So as Mayank said, we're collecting in advance from a security perspective to make sure that CAM and prop tax is paid.
Sorry, I think his question also meant is it inclusive of property tax and CAM? 105.8 is only inclusive of property tax and part of CAM. Yes.
Only 1 rupee of CAM. Remaining CAM is paid by the licensee. It's a question from Nafis. What is the expected net yield considering a gross yield of 10%? So net yield is just you subtract our 1% management fee, and then that's the net yield to the investor. Sunil has asked, how do you calculate 10% return? So whatever amount the investor puts in, it's 10% of that, and that includes the rent. It includes interest on security deposit. Why is Tenant not paying CAM? I think it's the same question. As per the agreement, Tenant is paying majority of the CAM. Just 1 rupee is on the licensor. Is the property being acquired from the developer? Yes, the property is. In lease period, if I would like to sell my asset, can I do that? Absolutely, Sunil. We have a very robust, very active secondary market as well. We have investors who come in and because of some emergency of their own, they've sold within a year. We facilitated a lot of secondary transactions for our investors, and we definitely help in the sale of properties. There's a question, is TDS applicable? Yes, TDS will be applicable, and that will be adjusted that will be refunded or adjusted depending on the investor's tax filing. But there is TDS. Mirza, are you buying the property with fit-outs? So this is another important part that Mayank was mentioning earlier. Fit-outs are done by Sitel. They've invested, I think, 17, 18 crore when they entered, and they've kept refurbishing the office every year. How do you manage to get a rate of 13,500? I think I'd have to, give credit to Mayank over here and his negotiating ability to be able to negotiate such a good rate for us. Credit to Mayank.
Thank you.
Why are you doing the annual appreciation of 6.5%? The 6.5 is on the all-in price, which means that the exit price we assumed is 20,000. Which when you jack up the rent, it still works to a very good exit cap rate. Why are you doing a rental top-up of 1.44? It's because we're a customer-friendly company. We haven't had an asset in a while. And so we're doing a attractive rent top-up for our investors. And although it's not a rent top-up in perpetuity, it is a limited period offer, and that offer will close soon. So it's only for the first few investors. Juk Pratim, can we check the money collected in the collection account month on month as an investor? Yes, the rent is distributed on a monthly basis. That will be credited into your bank account on a monthly basis. And the same calculation, etc., will be reflected on our very customer-friendly dashboard as well. How many properties do you manage? So we have 8 properties under hBits umbrella. But given the background, the parentage, we've managed multiple properties around the city. As a real estate development background, we've been present for 30 plus years. It's a question from Asim. How can I get access to valuation report by JLL? So there is a valuation report from JLL that should be available in the next day or so. So you will get it on your Google Drive link that has been shared by your investment manager. We will upload it there. And the valuation report, JLL is valuing it at about 17 to 18,000 rupees per square feet. And that will be published in a day or so. During renegotiation after the current tenancy period, will any IPC be involved? See, if it's a renegotiation with the same tenant, then there's no IPC involved. Even for new tenants, although we have relationship with IPCs, given our background and expertise in real estate, we have direct connect with HR heads, admin heads of a lot of large MNCs. So in that case, IPC is not involved. And even if an IPC is involved, that will be adjusted with the future rental. So there won't be any additional cost involved. When was the first property? So from Subahu, I think I really like when people ask this question because first property was purchased at the end of 2019. And we've already exited that property. We exited at a 17.5% IRR. So that was the first property. Samir, can you comment on liquidity of the units? So I think, in terms of liquidity, we look to offer already, investors can exit their share on the platform. We have 50,000 registered users, 500 empaneled partners who will sell your product, will go into the market. And whenever someone wants to exit, in about 30 days, we're able to exit their share for them. What we're planning though in 2 years is to offer liquidity ourselves to investors. So in 2 years, the idea is that we directly will be able to offer liquidity to our investors. Ravi, what's the exit timeline being looked at for this asset? So at a minimum, not before 4 years, because really that's when the appreciation really kicks in. Before 3 years, it's not even tax efficient to exit. Generally, in 4 to 6 years, we look to exit the asset. So that's the broad range. So we only recommend investors who do have a longer term horizon. What is CAM? From Ravi. So CAM is common area maintenance. CAM is basically paid to the society. So all the various tenants or unit holders will pay CAM to the society. And then that's used to maintain the building. So to pay for the housekeeping staff for the building, the electricity for the common area, the security for the building, the elevator maintenance for the building. So a question from Sandeep, can you elaborate on what is the scenario at the sale event? So exactly, we look to exit in 4 to 6 years, and which is why the entry price is very, very important. And the entry price right now means we'll be able to sell to an ultra HNI in 4 to 6 years or to a fund. So that will be the situation in terms of the sale event. Are there any restrictions in India for investment by NRIs who are US citizens? So NRIs are able to invest in this through their NRE or NRO account, but funds are returned on a non-repatriable basis to the NRO account. Is the return from investment taxable within India? So depending on the investor's jurisdiction, there's different TDS rates applicable. But in a lot of cases, that TDS rate is reduced if there's a double tax treaty and the investor has a tax residency certificate of the country. The 10% yield to Hemant is only for early bird investors. So we recommend to close soon because the offer is closing soon. The question from Mahesh, 10% on 25 lakh investment or on lesser amount? So it's 10% on 25 lakh. That is it, yeah. Minimum investment required is 25 lakh and rent per month. So on a 25 lakh, the rent per month is approximately 18,740 rupees per month. What's the maximum amount one can invest? So we generally restrict it to 10% of the total property value to make sure it's fair for all investors. And generally for people with larger, and we do have larger investors who want to put in 10, 20 crore, we have partners, and what they do is they put few amounts in every property. Nafis, the top up continues for 5 years. Mauli, how is hBits doing financially? I think hBits is doing very, very well financially. We have some great investors. For instance, Ambit has invested in hBits. Nirmal Jain, who's a founder of IFL, has invested in hBits. Incred has invested in hBits. The head of all the IPCs, your likes of JLL, Kushman, have invested in hBits. So we have some very solid investors, and we're doing very well. Asim, are you using data analysis like from CRE Matrix for filtering out the deal or projecting the IRR? Asim, exactly. We work with CRE Matrix to analyze each and every rental transaction and sale transaction in that micro market. In fact, the data that you saw above is from CRE Matrix. One more thing in terms of filtering deals, I'd like to mention. So, this asset, this 40 crore asset we've chosen after Mayank and his team have gone through 2,000 crore worth of assets on a monthly basis. I think totally in the last 5 months since Mayank has been looking at assets, they've looked at 8 to 10,000 crore worth of assets. Among that, we selected this asset. So we have a very, very stringent process of listing assets on our platform. Can we get a copy of Deloitte report? Yes, there is a taxation note that can be shared. Some of these questions are repeated. Can we visit the property and physically see it? Yes, the lobby, etc., of the property can be visited. You can drop by and have a look at the building. Unfortunately, the premises of the property, since it's a BPO and they have confidentiality agreements with all their clients, won't be able to visit inside the property. Any appreciation in currently managed property from Subahu? So as I mentioned, one property we exited at 17.5% IRR. But there are a few other properties as well. There's another property where ICICI Bank is a tenant. We acquired it at a rate of 11,600 rupees per square feet. Last year, which is a year after we acquired it, there's a transaction in that same building that happened at 15,500 rupees per square feet. So just in 1 year, there was that difference in pricing. And that is why we are very, very particular in kinds of properties that we list on our platform. We don't go for quantity. We don't go for volume or number of properties. We're not trying to build AUM. Our goal is not to list as many properties on the platform. Our goal is to list only the best properties on our platform. When is the rent expected to start accruing? So rent will accrue as soon as the property is closed, which we expect to happen in the next 2 to 3 weeks. Is the reserve sum sufficient? Yes, reserve sum is sufficient because any contingencies otherwise are obviously anyways taken out from the rental if required. Entry yield of 10% is for the first year. And post that, our average yield, our average rental yield over the 5-year period is 9.8%. And the same can be studied in our financial model. 18,700, I guess there was a question on the monthly rental. That is on a net basis. That is net that will go to the investors. That is after our management fee. I think there's a question on future transactions at hBits. So we have now with Mayank and team, we have a very strong pipeline of assets on the platform. So that should be listed post this. But I don't think we'll get such a good deal on the platform because again, this checks each and every box. Just to reiterate, entry yield 10%. That's a platform record. Tenant, Sitel, MNC cannot go wrong. In terms of quality of construction, building, Boomerang is AAA, one of the best buildings in Mumbai and in the country. Location, Powai. And then the rental rate where we're getting at, it's a significantly lower market rate, which points towards the appreciation. How much is the property tax per square feet? So property tax is 6 rupees per square feet. That is the property tax. Is there any square feet area that will be assigned to the investor? No, investors get shares and CCDs in a private limited company, and then that private limited company owns the full asset. So I think, Mayank, we're running out of time. The questions will keep flowing in. But any additional questions anyone has, please reach out to your investment manager. They will take you through any of the property related questions in detail. And any of these questions will be answered by your investment manager. Thank you, everyone. Thank you.
Thank you, everyone. Appreciate your time and appreciate your questions, all valid questions. Look forward to interacting with all of you. Thank you.